Good afternoon and welcome everyone. Thank you so much for being here today. At Meadow, we really want to see cannabis retailers succeed, and knowing that tax day is coming up, we really wanted everyone to have an opportunity to ask questions and get answers and hear some updates about the state of the industry. So as part of our educational webinar series, we've asked cannabis CPAs Patrick Finnegan and Peter DeGregori, you'll have to correct me on the pronunciation. They'll shed light on common tax liability issues they're seeing, income tax and business formation, 280E planning, and some steps to take to avoid compliance and accounting problems. So before we get into it, I'd love to just take a quick minute to introduce Meadow. For those of you who don't know us, we were the first cannabis business to come out of the Silicon Valley Accelerator Y Combinator, and we've been building advanced software solutions for cannabis retailers since 2014. We really work hand in hand with our dispensary partners to build their most requested tools that they need to thrive. And over the years, our system has evolved into a full suite of connected software tools, everything from cannabis retail, delivery, e-commerce, loyalty programs, rewards, analytics, text marketing, and so much more. So our system is really built in lockstep with California's shifting state and local regulatory requirements. And while other systems may let you oversell, our system has built-in guardrails to keep you compliant with clean inventory in all of your sales channels. So with daily metric monitoring, our team ensures that packages are uploaded correctly and any false negatives are rectified. So if you're still using another clunky system built for a different regulatory environment, we'd love to help you upgrade to a 100% compliant system designed specifically for California's unique regulations with no CSV uploads ever. So with a QuickBooks integration and more than 20 detailed exportable reports, CPAs always tell us how much they appreciate working with our system. And since we're talking about finances today, I wanted to quickly give a plug for the Cannabis Safe, which is a free resource that we created for the California cannabis community. So if you're raising funds for a new cannabis business, we'd encourage you to download the Cannabis Safe, which has standardized financing terms created in collaboration with 4 top cannabis legal teams to make it easier for operators to confidently raise funds while complying with strict industry regulations. So you can check that out on our website. And without further ado, I'm pleased to introduce Wally Wong, who is on our Meadow SoCal sales team. He also leads our education and social equity programming. Wally is passionate about cannabis and equity and helping our dispensary partners navigate retail compliance so they can sell more cannabis and take care of their customers and teams. We also have cannabis CPA Patrick Finnegan with us here today. You've seen him on our webinars before. Happy to have him back. He works with cannabis operators across the state, specializing in federal, state, and excise tax cases. Patrick always generously offers 15-minute free consultations for anyone here today, so we'll share his info at the end of the conversation if you need more support after the conversation. And last but not least, we're grateful to have Patrick's business partner, Peter, here with us today. He's from Newport Beach-based boutique accounting firm Vault 8. He brings over 25 years of traditional CPA experience and is the founder and CEO of Vault 8 Advisors, which he created shortly after California legalized recreational cannabis, and he realized the industry needed more highly skilled accounting and tax services. So Peter's expertise is in income tax and business advisory. And without further ado, I'll hand it over to Wally, and I'll see you guys at the end. Thanks for being here.
All right. Thank you so much, Aria. Thank you, everyone, for joining us today for an exciting. Patrick has done this before. Peter, this is the first time that you've done a tax webinar with Meadow before. They go really fast. We're going to get shouted out. Feel free to use the chat to put in some questions. And we also have some questions that got filled in pre-registration that I'm going to try to hit with priority. But if you got some questions, we'll try to honor that. But I always know that the room has questions regarding this. So Peter, before we go any further, let's hear the correct pronunciation of the last name, please.
So it looks more complicated than it is. So it's just DeGregori. So it's Gregory and put a D in front of it.
DeGregori. Here we are. Peter DeGregori, Patrick Finnegan. Thank you so much for joining us, gents. I think, and we were talking before it got started, I think we would be remiss not to begin with the status of not only of do you think this is a really dynamic conversation in the moment that we're talking about the tax reform? And I'll kind of hand it over to you, Patrick, to start there, because we had this conversation last week, right? And I was actually a little bit like, I was really reticent to say that if we were going to see any tax reform, but we're starting to see some movement. And it as it relates to the retail, as we know, this is going to everything's going to directly affect the wholesale price of flower, which will affect pricing for our retailers of what they're stocking in the store. So what are the thoughts with what we're seeing so far and what we're going to see in this next 2 quarters, you know?
Well, I think there's a lot of movement for tax reform, and certainly the governor's on board and has spoken to the need to have such. There are some headwinds, though, for tax reform, because if you lower taxes, there's been a lot of great nonprofits that have benefited from the taxes that have been paid to by the cannabis industry. And they're reluctant, obviously, to lose fundings for those. But California's got a lot of tax revenue now, and if there is a time period that tax reform can take place with the backfill coming from the state government, now would be the time to do so.
And because we saw a list past it. If anybody's been watching, we were just talking about that Humboldt did affect the cultivation tax up in Humboldt County, and we're wondering, you know, do you think that there's any version that by local municipalities taking suit affecting specifically whether it be the cultivation and specifically, do we see it through the lens of even if there's a temporary reprieve of taxes, right? Is it a long-term, because it all equates to like real business planning, right? All this equates to real business planning of whether it's a temporary, where it appears temporary for the retail end of the supply chain.
Yeah, and I think what's needing right now is the industry is crying out for these tax breaks, because let's say you're in, I'll pick any county, let's say Santa Clara County, for no other reason. I'm not picking on that, but if a dispensary has a $14,000 a year licensing fee, or it can be even higher, $25,000, that comes right off the top of your net income, right? Those are real numbers that you have to pay the taxes even before you've had your first dollar in the business. And what the operators are saying is there's a lot of headwinds in cannabis, being, the taxes that they have to pay. Certainly 280E for retail businesses is a big issue. The licensing fees, the labor costs, the insurance, the theft that's going on in a lot of our inner areas, and that's happening to the cannabis business. These are all difficulties in owning and operating in cannabis. And I think the discussion has to be, and it certainly was helpful in Humboldt, where they reduced the taxes from 100% down to, I think, a 15% licensing fee, and certainly the work that was done there. But all of these need to happen to make it such that the industry can survive and prosper.
Right.
So many locations are not allowing for cannabis licensing. There's vast deserts among our state on where people can't even buy retail cannabis. That's affecting the supply chain and the productions as well.
And Peter, I don't want to leave you out of this. You're down here in SoCal, as with me, and I'm sure you're watching the. I don't think people in NorCal can appreciate just how many new licensees are coming online down here. It is literally. I mean, by the end of the year, I don't know what it looks like, but I do know that the overall retail space, especially, is going to be vastly different. I think it's a good thing. I think ultimately it is a good thing. But can you speak to like these last 2 quarters and what you saw, and then we're seeing a little bit of contraction in the consumer market, and what you've seen so far with some of your clients as we go into this new year, because it's just a little bit, it's different. People are aware. A lot of stores are opening to their left, to their right, new delivery services, in addition to what we all know is a pretty strong traditional and legacy market as well. I'd love to hear your thoughts.
All right, thanks. Well, Wally, if you're down here and we're close, we're gonna have to hook up in person, but
yeah,
we'll talk about that another time. Look, Patrick really stays up on what's going on with the state more than I. And that's why him and I are just really good team. You know, we tag team everything together. You know, I was just up in Hollywood 2 or 3 weeks ago, and there's just more of them open up down the street, around the corner. And what's happening is you have pressure on pricing. Margins are getting crunched down. And I think maybe Humboldt started this. Maybe some other counties, cities are going to start looking at it. When you have oversupply, demand drops.
Yeah. And I think that's really the thing. And I think that that is going to be for Southern California specifically. I think it's going to be a real challenge with what we're seeing in terms of the scale of cultivation, it's a real kind of go big or go home kind of situation, especially down here with the indoor grows and how that affects it by the end of the year. Ultimately, I think it's a healthy thing. I think it's going to be healthy overall, but for the new licensees especially, and I'm sure we got a few in the room, it can look a little bit daunting. All right, so let's keep it moving here. Let's just start with just basics from both of you. Just like if we were to take basics, because I know we've got some new licensees or new teams on. New basics of if you're coming, treat me like I'm a dummy. If I've never been a part of, never run a cannabis specific business, not so sure where that excise tax fits in, and I'm preparing my books for an audit, for a tax season, what are some basics we can start with?
Patrick, you want to start?
Yeah, I'll start on the sales in the state tax side. The primary area I would look at if I'm having a retail company is how have I set up my point of sale system? Because you make an error there, it carries over for years. And the story I'll tell is that if you don't include the excise tax in your taxable measure for sales tax, and you set it up and all of a sudden 2.5, 3 years later, you're getting audited, the tax liability goes back to the first day. And so you got 3 years of problems that you've never collected from your customers. And now the government's saying, hey, you owe, you were short $10,000 every month. Oh, and by the way, we're 3 years into it. So now we've got a $360,000 tax liability. Those are real and those are preventable. And those are the areas that Peter and I have to have correct, because if you don't, it's hard to argue with the state that you don't owe the money because it was your responsibility to properly set up your billing system and your point of sale. There is a lot of vendors out there that are incorrectly charging. And for me to tell you who those are, I've seen errors in Greenbits. I've seen errors in Indica Online. Not to point those out, but to say that if you have those, or if you have a software system that you're not sure if it's correctly charging the tax, get somebody professional to say, hey, look at this and say, am I charging and remitting the right tax? Because if you're not, you've got a risk that's carrying over for a long period of time, and it's a simple fix. That is a primary area that I'd seen, and I see people write about those in blogs and so forth. It is that important to get right. Yeah,
I couldn't agree more. The need of having a tax professional, especially down in Los Angeles, when we've got the incorporated, unincorporated area, all these different areas. Every region has its specific challenges, but to have the tax professional set up so the taxes are assessed right in the system is so important. And that is that you want to find someone who's going to accept and own that fiduciary duty. Peter, any more to add regarding that and what you've seen so far?
Yeah, I think just kind of further conversation what Patrick's saying. The point of sale system is key, because that's where the business owners are going to say, we got to get it set up, manage inventory, and we got to be ready for sales. But we've seen a lot of problems where it's not just set up right, it's not calculating the taxes right. And it causes problems at the local tax level, the sales tax level. Sales tax isn't being applied to the excise tax that's being charged.
Yes.
Right?
Yes.
And it is much easier in my mind, and cheaper, eventually cheaper, if you pay more to get it set up right and you buy the right software to get it set up right. than going cheap in the beginning and then have to get a bill, 3-4 years later for $350,000.
100%, 100%. And I'm biased, of course, but we both see it. We all see this because we're on the other side of the table. I think is of seeing people who are undergoing audits or facing, a tax bill because of system inefficacy is the way we like to frame it. For the new teams that are in the room, could you talk about if they're coming about regarding business formation and overall structure advice for the new teams? Because this is the thing I think is so challenging. I only can speak to my experience with there's so many things that new operators who have not participated in cannabis take for granted that they don't realize. And I think this pushes up directly up against 280E about that initial business formation. They secured the license and they think they're going to run in, they're ready off to the races, but they don't really realize what 280E represents in there. I'd love for you guys to talk on that. We don't have to spend a lot of time with it, but it's such a blind spot for new operators.
So Patrick and I feel have, a similar thought here is we're seeing if we're focusing on dispensaries, generally you're going to be set up as a corporation or a C Corp. And why? It doesn't have to be set up as a corporation. I mean, you have licensing requirements and I'll turn on my light later, but energy saving licensing requirements, but generally a C corporation gets set up and, cost of goods sold, which we'll expand on later, is going to be a tax deduction. But for federal, you're really paying tax at gross profit. And this gets into the setup of your GL system after your point of sale system is working right, making sure you're capturing the right cost and cost of goods sold to try to drive it down. Setting up a management company doesn't get you out of, 280E. We're in it at the right time, Wally. I'll talk about 471C.
Yeah. I wanted to go right into that after this. Yeah.
So we're seeing C corporations. The other reason why I like C corporations is, remember, 280E applies to federal, but California doesn't. So California cannabis companies get taxed just like a non-cannabis company. More or less, you pay tax on your net income. When you get into cultivation and everything else, you can pick and choose. But the other reason why I like C corporations is generally the license, when you're ready to sell it, you got to sell the stock. So it's very easy. And then 2, the entity itself pays the tax. So then the next thing is with C corporations, even if it's not cannabis, well, how do you get the profits out? Well, first, generate the profits. And then how do you get the profits out? You could do management fees, you can do payroll, all these different things to look at.
And yeah. Peter, when you're talking about that, Patrick, I don't want to cut you off. Do you want
No,
to
I was also going to say issuing dividends to the corporate shareholders, but Peter's got that.
Peter and Patrick, also off of that, any changes to what you just said regarding like a verticalized operation? Because often, it's so common if a retailer, somebody's got a retail non-store, has a storefront retail or a non-storefront retail. So often, as we know, people pick up a distribution license, or they make, in 3 years, they've got a manufacturing, distribution, and a retail. Does that stay the same in terms of initial entity formation under that C Corp, or is for each license we're considering it a separate entity formation?
Well, Patrick, I'll let Patrick speak a little bit more regarding the licensing, but generally we're setting up a separate entity, typically one for cultivation, one for manufacturing, one for dispensary. And then you have to look at the ownership and the relationship and any common expenses. Doesn't make sense to have a management company. You got to have a strategy.
Right.
Yeah, and I'll add on the common ownership of a distributor that you talked about, having a distribution and a dispensary together. What that allows you to do under state taxing is to have a non-arm's length transaction so that we can move the excise tax over it to the resale side. And oftentimes that does create benefits for for that relationship, especially if we're under the 80% threshold that the state of California has established. If you're moving let's say you're buying product at $10 for an eighth, you're selling it at 15. If you have that symbiotic relationship between yourself as the distributor and to the retailer, you can really lower the retail sale price of that product by having a less of an excise tax burden. That's something I can probably need to talk offline to the dispensaries or people that are vertically integrated, because there's more strategy about it. And hey, are you really going to run those margins? And does this make sense for you as well?
Yeah, and I bring all this up because I think equal to what else we were talking about at the beginning regarding the new licensees opening. I'm sure you've all been seeing and watching collectively just that the M&A space, the merging from small to medium to large is just, there's so much movement. And, you know, as it stands, every license is of value in the space. And I've seen on my side, I have seen random partnerships come together. People that I never thought would even meet all of a sudden working together as teams, which I think is also one of the cool things about cannabis. All right, so let's do some of these questions because we're already, and guys, hop in with anything. If I'm leaving something out, be like, well, you need to talk about that because we're already at 2:24 here. So we've got some questions from the audience, and I'll start kind of running through this as we go. How is the excise tax set up in Meadow? Is it automated even when taxes change? No, you can. The excise tax is automatically calculated to California specifications upon inventory reception. Okay, when we're receiving it, so it's calculated properly inside the system. You can edit it though. It'll from the default. It will automatically execute, but you can edit it. So that's an easy one. Okay, we've got a straight up tax question. If I purchase a product for $10 and then pay excise tax, and then I sell for $25, I will then charge sales tax on $25. Is that correct?
Yes. Be careful though of what you're putting on your invoice too, though. If you're putting the excise tax at $2.70, which would be the rate at the $10, then that has to be subject to tax. Any separately stated excise tax has to be part of the taxable measure. So where I notice this, and I'll circle back, hopefully make it a little clearer, is if I'm saying that the excise tax and the sales tax have the same basis, I mean, they're applied to the same number, I got issues. The sales tax should be the excise tax base plus the excise is what the sales tax should be charged upon.
And let's talk, Peter,
hopefully that's clear. If not, let me know and I'll try to bring it.
You're gonna get blown up, my friend. You're gonna have.
I know. I get it. It's that important, Wally. If you mess up your point of sale system and have it incorrect, it's a long-term problem.
No, and I think, you know what's so frustrating on my side is there's just straight up there's quite a bit of disinformation out there, and a lot of friends of friends getting in people's ears. That is a very real thing of telling you how to assess it, and let me tell you how to do it. And that where I'm at, this is my 5th year on this end of the supply chain in Canada. I'm just like, this is just plain wrong, right? And that we're now in a true audit. There's a stick at the end of this, which is the audit, and which we've talked about earlier. Peter, you brought up about the 471C, and that was a specific question that we got from registrants. Do you have any more advice regarding 470? The question was literally, do you have any 471C advice for retailers?
Yes, I do. So this issue came up, last year. What I'll do after this webinar, Wally, is I'll work with you. I'll give you a link and I'll have a memo put on our website for everyone to read, a memo that I wrote. But more or less, here's the concept. Federal law says under 280E, you can only take a tax deduction for cost of goods sold. I won't talk about everything in cost of goods sold, but what are the main components? The flower, excise tax, local tax, right? Those are the normal ones, and then you try to capture more, right? So now you're really paying tax on gross profit. People don't like that. It gets very expensive. It makes your tax rate huge, right? So then 471C, there was a lot of advisors last year kicking it around that it's the greatest thing ever. It's secret. You don't have to. Now you're going to be able to pay your tax and make it lower. Well, how are they doing that? Under 471C, it's saying, hey, if you're cash basis, you can be cash basis typically if you're 25 million in sales or lower, then you can elect to deduct your inventory. You don't have to show it on your balance sheet, deduct it under cost of goods sold. And then it goes so far to say, in theory, if your books have all your expenses as cost of goods sold, and that's your books, that's how you can file your tax return. So if we step back and we say, well, look, does 471C allow us to get around 280E? My answer, which everyone will be able to read and talk to their tax advisor, says, unfortunately, no.
Right.
And this only applies to federal, right? California, which makes sense. They're saying, hey, cannabis is legal in California. Thank God. Now they say, fine, you can pay taxes on your net income. But I'll give you a link after the webinar and you can share it with your audience.
Yeah, definitely. I appreciate that. I appreciate that. So we have another one here. Please discuss 8300 issues and enforcement and how retailers increasing prices results in higher markup excise tax calculations.
So I have a Form 8300 audit that I'm representing right now. It's not in a cannabis, it's in a cigarette and tobacco case, but I do other outside businesses outside of cannabis. What happened is a distributor is taking money from their customers. So it would be similar to a distributor taking money from the dispensary owners for product. And if they're taking cash in excess of $10,000, they're required to get a Form 8300 completed that identifies that transaction as well as how much money they received from that dispensary. So that's generally the way it goes, but it also can go from a cultivator receiving cash from a distributor as well. Okay, so it's anytime you take or you receive in excess of $10,000 on a transaction. So a distributor will issue these Form 8300s to the dispensary saying, hey, I received this over $10,000. And they're required to inform the IRS within, I believe it's a 15-day time period that the transaction occurred. But even more so, at the end of the year by January 31st, you have to send to everybody that you received over 10,000 and above a description on how much you took in during that year. So if you took in $100,000 over the year and over $10,000 increments, you have to tell that company, hey, I received $10,000 from you, and that's reportable to the IRS. So that's where Form 8300 is real problematic, is if the IRS is seeing all these monies, cash being received and reported by distributors for you, and that amount doesn't equal what your retail sales and so forth, it really is an avenue that the government has into your business. And that's why it's so important. You have to understand this is a requirement by law. It's meant to clear up any money laundering cases, and the IRS is serious about these.
For both of you, off of these because the level of specificity, I think that of these last two questions, can you speak to when we're talking about it, kind of the relation, just like we're talking about, you know, the importance of cannabis specific point of sale, high system efficacy, Meadows the best. If you, I'm happy to pitch at the end of this thing and tell you the significance of that. But at the same time, right now on your side, to having when we're looking at like deepening use of existing tax code and then it being applied and getting a bit advisement from people from tax advisement CPAs who have not worked in cannabis, and like what that looks like on your side of the table, and also on the audit side, because that's what I think I'm always floored by, is the level of where the CDTFA comes in and how they're looking at executing the audits to and we're going to talk about delivery after that, because I think it dovetails right into delivery and local jurisdictions. But can you all speak to that in terms of the importance of having somebody who's actually works in cannabis in a CPA capacity doing your books?
Well, Patrick and I have seen this,
Yeah.
and I'll hit some of the highlights. So what it seems like to me is that when California approved recreational cannabis and we started getting all the cannabis businesses starting up, it seemed like, and I'm not saying this is all the accountants, but it seemed like the accountants that weren't very technical went into that industry and said, hey, I'm not that busy. I'm going to start working on the cannabis industry. And we saw them charging a lot of money, getting paid, and the service was terrible. Now, I'm not the best, and there's other people that do what I do, but I also see that in non-cannabis industry too. So business owners just need to be smart. If their gut's telling them this isn't right, or they're not answering my questions, or I don't have good financials, then they got to go out and, seek information. And that's why I think it's great that, Meadow, you guys are doing these webinars, because it allows people to learn some information. But, I've seen charges of people paying, $3,500 a month for easy bookkeeping, and their bookkeeping's terrible. And then what happened? We saw that their revenue was so much lower in their QuickBooks system, but on metrics, it was like 10 times higher.
Ooh.
Well, what happened? No one was reconciling it. They didn't have a system like Meadow that reconciles it. And then later they found out, which was way too late because CDTFA came in, someone was using their metrics license other than the real owner.
This is a new one. It's hard to make me go. This is a new one for me. I haven't heard of this level of license piggybacking. I haven't heard of this. The unbeknownst use.
It was also the shopping of the distributor licenses as well. As if somebody got the name and they piggybacked on another license as well. We've had some discussion with CDTFA on the nature of these burner licenses, Wally, and what
Right.
people can set up a distributor license, because in California, all taxes flow through the distributor, right?
Right.
You set up a phony entity and you buy cannabis from a cultivator. They simply say that they sold to a licensed distributor, which the licenses aren't that difficult to receive, right?
Right.
And then that distributor takes a cannabis, sells it interstate commerce, sells it for retail, collects the excise tax, and the excise tax never gets remitted. Well, remember, the distributor or the dispensary owner is off the hook because he's got the receipt saying that excise taxes are included and separately stated on the invoice. And what happens is the state loses all this money. I've talked to my coworkers or ex-coworkers that are still working at CDTFA. It's almost a whack-a-mole issue here. CDTFA sends out auditors. They look at the transaction. No, it wasn't me. It's this person over here. And you're following transactions down a rabbit hole that tax has never been paid. And I've mentioned to you also, you want to see how serious the state is about taxing and the regulatory issues. It's how many people have they placed into these jobs that have the responsibility of monitoring and doing the tax work. The state has 2 employees that do cannabis cultivation and excise tax auditing, certainly not at the level that you'd see in a tobacco and alcohol or sales tax or however. So the resources really weren't there in the most pressing of time, which is the beginning of the 2018 to forward. We're now over 3 years into this program.
And that goes right into, before we get to delivery, because we got to spend a little bit of time on delivery. But that goes into what we've always talked about, Patrick, is the secondary consulting firms. Especially, I don't think that is as it is. I don't think we see that as much down here at Peter, down in SoCal, but definitely Central California and up north, we do see audits being affected by secondary consultant teams that are representatives of local. Can you speak on that? Because I know you have some real specific.
I think you're describing like an HDL company that locality might contract with the company that says, I want you to handle all of my cannabis licensing and compliance work. I don't, let's say I'm the city of, let's say Long Beach for none other. I don't want to hire people to actually have to do the review of all these businesses that have now moved into Long Beach. We're gonna contract with the HDL or any of the others. I don't know how many there are to do that for us, so we don't have to pay the wages and the benefits of hiring all new staff to do that. So they contract with these companies, and now these companies have that responsibility to audit you. And I've always had distrust, because if you have a financial interest in how that audit's going to work, whether you continue to conduct the audit, if you find errors and so forth, you have a vested interest to find errors, and you can't go into it like that. You have to be an unbiased reviewer, and some of that's what concerns me. I think it's that important to hire or to have somebody like Peter or I or any competent CPA to take a look at that and seeing if what their work is actually accurate or not.
Yeah, this specific scenario is a real challenge, and I honestly don't know how it ever got started and got to this extent. But I think at the level of normalization in terms of where these consulting firms, you see it across the country, as cannabis is more and more these whether statewide or local consulting teams literally creating the regulations and then auditing and securing clients off of them. It's a banana situation. I do want to be really clear, because Peter brought it up, and for the new teams in the room, because you touched on it, Peter, regarding metric variance, metric discrepancies, and audits. And I don't think people understand it. So let me really clarify that. And Peter, please hop in here as well, because I see it from one side, you see it from the other, right? So what I mean by that is we often have a team. I currently have 3 teams that are going through egregious auditing because their system was not reporting correctly to metric. Okay, there is what we call, broadly speaking, system inefficacy, which means it doesn't do its job. Because this is the thing for everyone in the room, metric API goes down. When that metric API goes down, it is the job, what you're paying your cannabis point of sale system to do is maintain accurate package counts. Okay. So when that little blip of outage happens, if the system can't do its job, or if it has weird inventory workflows where, like, for example, you create a cart, a salesperson, which is super common, creates a cart and then abandons it, customer changes their mind, that inventory holds and does not and pulls from the package, and then we start having these minute discrepancies that over a period of time start adding up. So this is happening. CDTFA comes in, looks at the metric account. There are tons of phantom packages that have already been sold that were never auto-finished. On Meadow, we auto-finish them. There's gross discrepancies, negative package counts, and then they come and audit you. And then, Peter, they reach out to you, and you're like, I don't know your side, because I get them. That's when I get them. That's when where they're pulling their hair out and they're like, we get this thing out of here. We're under audit and we have to begin the cleanup. But I know on the other side of the table, you or someone like you is having to manage that audit. So please speak to that, because I don't think retailers understand that these things go together. And I'll be honest, I didn't think it was going to happen as fast as it did. I thought it would take a little bit longer, as that being metric being grounds for audit and discrepancies, but it's quickly become the reality, and it's only growing. So could you speak to that, or like that situation where you're like, someone calls out to you, we don't know, we're being audited, I can't tell you what we sold, the goods have already left, it's a year or 6 months of sales unreported, and now I owe tax, what do I do? Like, can you talk to me about that sort of situation?
Well, I think thankfully, CDTFA just doesn't have enough agents yet, or else if they did, we'd see a lot more of them.
Right.
Because Patrick and I see that the reconciliation between the point of sale system and metric, or the sales receipts and the point of sale systems are not working as correctly. So, set it up right. Have someone maybe look at it periodically, because things change. Make sure the links didn't break and everything. I've had a couple, and it's
Right.
because of the discrepancy between metric and the tax return that was filed was so huge. It got one of those two people to come in and say, hey, I got to start auditing this. If they had 200, they'd be doing way more audits. But Patrick, why don't you add a couple other comments?
Yeah, and the way it works is there are two people doing it, and what they look at is the overall records available to them.
Right.
And if they take a look and they see there's a company out there whose reconciliations are so far off, that's how I'm going to spend my time. That's my audit selection thing, and that's all the more reason why you have to be tight in your reporting and your metric together. If
And
you're
you-
not, then that's just welcome to my business. Please come and audit me, right?
And you should know, and this is what I think also, before we move on, is what the space should know as well, is before those mass reconciliations, during that initial migration period, there were, they allowed mass reconciliations increasingly, and we're talking about in the metric account to do a cleanup.
Sure.
We're increasingly seeing there's a lot of pushback from not only metric, but also CDTFA to basically they want a lot of grounds for why you're going to be affecting that level of package cleanup. So it's something to be aware of, once again, because there's always the friend in your ear. Let us talk about delivery. It's going to be the biggest growing space. There's some tax stuff that's specific to it, to the local jurisdiction. Can y'all just broadly speaking, give me some good, if I'm just running if I've got a retail storefront and I've got a couple cars, or if I'm just a non-storefront and I'm running 5 to 10, that is five is becoming kind of a standardization. And then you got teams running up close to 30, 40. And then you've got the real brave souls that are attempting to deliver across the state, which I don't know how long that lasts, but those taxes follow them, right? Jurisdiction to jurisdiction. Can you all speak to that?
Pete, I'll take the quick hit on the local tax and discussion. Is that if you are, let's say you're in Sacramento and you have a delivery company, well, you're delivering to 5 different tax zones, right? You might be into Yolo County, Placer, El Dorado, Sacramento, and elsewhere. Each of those areas have different tax rates. Your tax software has to be sophisticated to know that when you make a delivery, because remember, title passage is where the tax is owed, right? It's not from the place of shipment, it's where the title and the customer receives that inventory. So you better have your taxes internally correct. The state of California, let's say you just do one flat rate and everybody gets charged that amount. Well, California during an audit, if I was the auditor again, I would pick up the tax at the higher rate. If it was lower than the rate that you collected, I'd still pick up that rate because you can't enrich yourself upon the taxes. So you're not saving yourself by saying, all right, I'll do an average rate. You're going to get screwed. You are going to get screwed. So the state will always look to see where the delivery is, calculate the tax upon that, and compare that to what you've remitted. So a lot of areas to mess up, and that's why it's so critical to have it right.
Yeah, and I think San Diego is pretty infamous for coming to looking for their taxes across. From what I understand, that no matter how it doesn't matter how far north you are, they'll come looking for their appropriate taxes.
Yeah, you just had to use their roads. That's what they told me. Hey, your business drove on our streets in San Diego. You owe X amount of money. And so what do you do? I mean, they have you. You have to have your license. You have to be compliant with the whole taxing authorities. So.
And Wally, just like Patrick mentioned, just up in Sacramento and all the different, tax rates, we have the same thing in Southern California, right? Yep. So this is where it comes into the counties, the cities wanting their fair share and not getting gypped because they've already spent it 10 times. So they want it.
Speak to that on spending it 10 times, because I think it's relevant because I think I think in terms of the tax reform discussion, I don't think people realize that this tax money is spoken for quite on the local and at the state level. That there's programs that are being funded, and it's not like they can automatically refund some of these programs. Especially, I mean, Patrick, you were talking about law enforcement. You know, people, there's actual funding that's happening because of these cannabis tax dollars.
Yeah, and the real scary one, as far as being able to reduce it, is generally a city, and most any cities, the majority of their expenses is for police and fire.
Right.
At least in the town I live in, it's probably 60% of the city budget. And so let's say cannabis comes along and they're expecting $200,000 a year in tax revenue for the city. They go out and hire 2 police officers, right? The tax doesn't materialize, and or let's say we want to reduce that tax. Well, they still have those 2 bodies, and it's really difficult for a city council person in their district to say, hey, we're going to cut police and fire so we can give the money to cannabis. I think that's something that cannabis people have to understand. And, hey, we can't just demand these taxes.
Yes.
There's other people that are receiving these taxes. It could be a very worthwhile nonprofit that talks about after school care for children. It could be funding for drug addiction and try to alleviate that, or provide services for homeless. There's a lot of other worthwhile goals that excise and cultivation and the cannabis taxes are supporting. So I think it'd be naive for the industry not to understand that there's give and take in this issue. So please understand who the other monies are going to, and work with them at the beginning to understand that they're going to have the pushback as well.
Yeah, I think that was, if there was a misread, it's that specific issue. And let me say to all the licensees in the room, you can affect this. We say all this because you can affect this, but that needs to go into part of the conversation when you're doing your advocacy to your local and state representatives, that you can't just be like, we want tax reform. You have to be aware that of the funding for the secondary programs. Okay, let's talk. We got 10 minutes left. Let's talk deductions, 280E. We got a lot of those around the questions like, Brian, is there anything, what's on the table for entity to deduct, or what is the most common one you see attempted that they shouldn't be doing, or that someone told them, oh, you can deduct that? Like we're seeing on here, we have, can you deduct website development? What is, and this is for like a retailer, let's like just a retail license. Can you speak to that, you guys?
Yeah, I'll take it first. Is, 280E, I think you have some simple ones that are no problem, and then you start getting into a gray area and starting to get into the red area. So let's take the simple ones first. So the flower, okay, the product, the excise tax, the city tax, right? These are all costs that are required to sell the product, right? I would say that those are the basics, and then you got to look at it. Then Patrick and I will go in there and say, okay, well, of your rent that you pay for your space, how much is your storage and warehousing space? Because that's cost allocated to your product. And then we try to carve some of that in. So it's not a home run. These are singles, but singles and doubles can get some points up on the board. We can look at security. We want to look at, do you have any people on payroll and that are doing packaging or trimming or working in the warehouse? We want to pull that into cost of goods sold. So because 280E is an issue for federal only, doesn't apply to California, we want to try to get as much into 280E as possible. But there's guidance with the Harborside court cases.
Right.
But, I want to just leave it at this before Patrick adds some other ones that maybe I forgot, is the best 280E that I've seen on a tax return from a prior professional that apparently dresses up like he's in safari clothes in LA. I've never met the guy.
Love him already. We clearly need to invite him out. This sounds like our type of person.
Maybe he likes Jumanji. I don't know, but I've never met the guy. but I've seen no 280E, right? Now on your tax return, when you do a business, it says more or less, what's your net income? And then tell me what your 280E deductions are that you can't deduct. So there's got to be something. He didn't have anything, right? Patrick, what other ones are we seeing?
I would say if you're a dispensary and you have somebody that's responsible for purchasing, procurement wages would be one that we would look at closely. But I know Peter and I are in agreement that we want to see job titles and descriptions to support that as well, just in case we have to, deal with that or defend that in the latter period. But it's not uncommon to send somebody up to Humboldt or some of the farms out there to go buy flour and to do that.
And
Right, so
go ahead. No, go ahead, Peter.
oh, so Wally, so what I was going to say is then the majority of rent's not deductible, right? Because it's in 280E. So 280E is bad. So it's not deductible. Security, maybe we look at it, salespeople, the employees, all those things that are to run the business are not deductible. And, the Democrats talked about going and making, 280E go away and give banking. They haven't done it yet.
And like that's another webinar. Let's save that because that's a whole one when we'll have some things we can throw at the wall for that one. Regarding 280, what about for delivery operators, the cars tracking any of the phones? Is any of that in game production?
I would say that delivery, and Peter, if you agree, I don't know, but I think they're the most impacted by 280E because so much of their expenses are associated with the delivery drivers and the vehicles. That's a sales expense. Are we tracking the inventory? I guess Peter and I could make a point on that to include it, but then again, that's a small dollar amount. But the expenses of the employees and the deliveries and so forth make it a really tough environment for 280E.
Thanks, guys. And this is the last question we're going to take, everyone. Would just the buyer's salary be deducted or the salary and the transportation expense?
Neither, right, Peter? I don't see it. I mean, the vehicle is part of the delivery and expense. It's not a cost of sale.
Yeah, see, this is a hard one. This is where, you go in and look to see, and thank God about Harborside because they've gone toe to toe with the government. So you kind of go back to those sort of court cases, excuse me, and you look at what's been argued, what's been discussed.
I saw, I might have misspoken. They had identified the buyer's salary to be deducted or the salary of the transportation. If there is a buyer that's operating on behalf of a delivery company and their job is to buy the weed, we can make a contention that that's part of cost of sales. They're likely to be doing other things. Not everybody has a full-time buyer, but the transportation expenses are considered part of sales expenses.
Okay, so we're about to wrap as we close. Two things I want to say, and we've talked about it before when we did this, Patrick, is the other thing we didn't talk about is the importance of getting how much a good cannabis bookkeeper is worth to an operation, that they're worth their weight in gold and actually having a good bookkeeper. We didn't really touch on that, but that's for everyone in the room. If you don't have somebody that has done bookkeeping in cannabis, you need just as equally as you need a good CPA, that is a highly, they can save your business. I also want to say, because someone did ask us at the beginning regarding if the tax issues that we're seeing are the bad software issue or lack of internal testing by the compliance person, owner, operator. There is, it's and on the tech side, it's system efficacy, and I can't stress this enough. If you're taking for granted that the system that you're using is gonna just work because you paid for it, it's not, and that's the unfortunate thing and a disinformation that we're trying to really dispel over at Meadow. The reality is that some of these systems do not execute tax structures correctly. They don't do it consistently. And when you pair it, because this is the thing what I was trying to impart earlier, Tax structure execution doesn't mean anything if the metric reporting is inaccurate. This is what's cannabis specific. This is where Meadow comes in, where these point of sale systems comes in. If the tax structure is fine, but it doesn't report to metric, that you're just taking on one problem and leaving another. They both have to do it correctly. Meadow's the best at it. To the delivery, we just rolled out dynamic delivery. We have full ice cream truck model with regional tax execution automated into the system that comes up as a line item in the reports. So when you call Peter, he can quickly say, oh, there it is. There's that local tax I was looking for, et cetera, et cetera. So please reach out. If you're facing any, once again, and I think Arya brought it up at the beginning, if you're doing any manual uploading as a retailer into metric, if you're doing manual adjustments inside metric, that's not the way to do it. And it's a real thing. Let me say that is not tenable. It is not, that's not how you do business. It's a horrible way to spend the time. It's a true labor cost. And there's a better way to do it. And Meadow does it every day. So please, I want to thank Patrick and Peter for joining us today. This was awesome. I'm sure we'll get look, let's make a little pact here that if broad tax reform happens, let's run this back and do it again, because I think it's going to change this conversation considerably, right?
Of
Hope
course.
so.
Yeah, right, for all of us. Arya, there are everyone's contact information. Please reach out to Patrick and Peter. They basically, between the two of you guys just about cover the state of California here. You got Peter down in SoCal, Patrick, you're from the Bay on up, right?
Yep. Bay on up.
Awesome.
Wonderful. Thank you so much, Patrick, Peter, and Wally. We really appreciate you sharing your expertise. Thanks to everyone for tuning in, for asking your questions. If you still need more support, feel free to reach out to anybody. Their email addresses are there on the screen. And we look forward to seeing you all again, hopefully soon.
All right. Have a good one, guys. Thank you again, Patrick and
Thanks,
Peter.
Wally.
Thanks again, everyone. Take care.
Bye, Aria.